this one. I kind of like 1099 questions because they can be super interesting. Um, so a client received two forms for commission paid to them in 2025. One was a 1099 NEC with box one for non-employee compensation and box seven for state income filled out with the commission amount and the state of Virginia referenced. And down further down, it does say that the client is Virginia based, so the 1099 NEC made sense. It's just missing the withholding amount. But what this firm did is they also issued a 1099 miscellaneous for the same commission amount and put the state the state income and the state withholding for the tax withheld it with Pennsylvania referenced. The 1099 or the company was in Pennsylvania and the employee or the client is in Virginia. I'm not going to get into this if the commission should have been paid as if this was an employee and and the commission should have been paid as wages, because sometimes it is entirely possible that an employee receives commissions that don't that are not directly paid by their employer. It's really common in the auto industry where the salespeople get what's called spiffs, which is a form of commission, but it's not paid by the dealership that employs them. It is paid by the car manufacturer that they have different incentive programs. So we're just going to assume that a 1099 NEC with state withholdings is the correct form that should be sent to them. But I don't think that what they received is correct, because there is a box on the 1099 NEC where I've got a 1099 NEC on the left and a 1099 miscellaneous on the right. On the 1099 NEC, you've got a spot for the non-employee compensation, which is box one, which she indicated was filled out. And then there is state tax withheld, which the poster indicated was put on the 1099 miscellaneous. And the state income tax or the state income was listed on both the 1099 NEC and the 1099 miscellaneous. But the state was listed differently. One of the forms listed the state as Virginia, and the other state the other state listed on the 1099 miscellaneous was Pennsylvania. There should only be one state that the wages or that the commission would be subject to tax. And I'm assuming the issuing company was in Pennsylvania. And Pennsylvania is one of the states that requires all 1099s to be sent to Pennsylvania, where if the recipient is in Pennsylvania. And sometimes Pennsylvania companies get confused. They think that they need to send all of their 1099s to Pennsylvania, but it's my understanding that only if the recipient is in Pennsylvania do you need to submit to Pennsylvania. And most of the time, the state tax withheld is only going to be withheld for one state. So the question that I would have before I can really finish answering that question is, are the were taxes withheld for both Virginia and Pennsylvania? And if so, the my answer doesn't change. The taxes should have been, or the all of the commission should have been reported only on the 1099 NEC, not also on a 1099 miscellaneous, because that's going to duplicate, that very well could duplicate that person's earnings, and it could cause issues when they file their 1040. Let's see, we have a question in the comments here. What is the difference between preparing W-2s and 1099-R for government workers compared to business workers? Is there something that should be done different for government workers? And I don't know the answer to that question because I have only done one project for a government entity, and that was a municipality that did not have a 1099-R for their employees. So I really don't know the answer to that question. But if anybody watching the replay knows the answer to that question, I welcome it to be left in the comments. The follow-up question was, how did I do it? There was no 1099-R because the municipality was not eligible for their employees to receive a 1099-R. So everything was just handled straight on the W-2. Another follow-up question, they wanted to know what software I used for that. When we do payroll reconstruction here at Payroll Restoration, we use QuickBooks Desktop most of the time. The only time, and the rest of the time, we use Excel because the software is, the options for reconstructing payroll, especially if it's a prior period or a prior year, is very, very, very limited. And we have the most flexibility with QuickBooks Desktop. Most of the commercially available software that people use cannot even could not even recreate a payroll for yesterday if that is prior to the start of the contract with that software. So we use QuickBooks Desktop Payroll, and we use Excel for all of our payroll reconstruction work. What if they don't have desktop? I guess I don't understand the question, because if the government has their own software to process the payroll and do the W-2s and the 1099-R reporting, I would think that they wouldn't need QuickBooks Desktop. QuickBooks Desktop Payroll is just what we use when we're reconstructing payroll for prior years and prior periods, so that we can put either, like, if it's in the current year, what we reconstruct would go into their payroll software. But as long as somebody is using a payroll software that works for them, they don't have to change their payroll software. But sometimes, and because I don't know about government worker payroll, because the closest I've come to government workers was a municipality, like it was a sewer and waste treatment facility. So they're government employees, but they're not government employees. they they're treated a lot differently than a regular government employee. And I don't have any experience doing government employee payroll. So I don't know if I can really answer that question. So I'm going to throw the previous invitation out to the audience watching this recording is to in the comments if you have any thoughts or suggestions or anything, please definitely leave a comment.